All right, so this is the July 2023 trading recap. Just about 30 grand on the month, $29,418.56. Been doing pretty well the past few months. I've been sizing up a bit, which has been one of my goals, and actually trading less and making more, really focusing on those A plus setups, which is very, very important. And going forward, I'm going to do the same thing. Focus on A plus setups, size up, and trade even less. But let's get into some of my good trades this month, some of my bad trades, and really where the bulk of the gains came from. So on the 12th, we had a few trades. One was RIVN. And for each trade, I'm just going to talk about why I was looking to trade it and then how I traded it and what happened. So I like big multi-day runners. And for RIVN, that's exactly what we got. A big multi-day runner from the 14s up to 26, 27 with big volume. And this day in here, the 12th is when I shorted it. Short plays, I usually find they do very well in the morning session up until around 10:30, 11, 12. Then they kind of grind back. So this was the day I took it. I was shorting it 25.20s. We cracked under VWAP and really just straight faded all morning. I covered for $1 share gain, 24.20. We ended up coming back, and I knew this one had the potential to come back just because I saw there was a big short interest in this name, and there were other big short interest names like Carvana this month that really squeezed people, so I was really always cautious. Also, when the market's so strong, I'm always going to be cautious because we are definitely in a very strong market right now. The other trade I took, let's see, what was it? NKLA on the 12th. No, I probably have the wrong day here, but let me get into that whole idea I just said about a strong market, actually. Let's just talk about this for a second. So when I'm looking at the market, first of all, if we really zoom out, we are still in a bull market. No matter what anyone says, price action doesn't lie. We are trending upwards. We're not far off the highs. And I like to use moving averages. The 10-day, which is the blue line here. The 20-day, which is this orange line. 50-day, red line. 100-day, yellow line. And all I'm looking for is higher lows, of course, to be established on this chart, and for price action to be above all of the moving averages. That is a very bullish sign. When we're hugging this 10-day in here and not breaking down and staying below it, it's a very good sign. Shows that there's strength in the market and you could swing trade. So speaking of swing trading, my two swing trades this month that I did well on was, first one was EH, and it's the similar idea where we're uptrending, big run, higher lows, higher lows. When we started holding this 10-day in here, I bought it this day and I sold it into the spike for a quick little trade. We came back down, like I said, when we're not cracking and closing below the 10-day. We did close below the 10-day, but we were still holding between, surfing the 20-day, making higher lows, higher lows, higher lows. I rebought it this day, sold it again for a quick gain. Really wasn't a true swing trade. The profit and the spike came so quickly, I just took it. So definitely could have had more patience. One that I did have patience on was at SMCI. Same concept. We had a big run. We had a pullback that was surfing, holding around the 10-20 day. We were reclaiming the 10-day and 20-day here. I bought it at 225, sold it when it broke out in the 270s. Definitely sold it too early because it's still hugging and holding that 10-day. But it's all right. Things happen. Sometimes it doesn't work out. It is what it is. So now going into that swing trade mentality, but this was more of like a day trade mentality mixed with the swing trade. On the 14th or 13th here, NKLA, that whole concept of having a big run, coming down, consolidating with higher lows, holding the 10-day, holding that 20-day, and then boom, we had a big breakout. So the daily chart looked great. Going to an intraday, let's see if we could get a 1 minute here. No, we cannot. So I'll use a 5 minute. And let me make this a little cleaner. So coming into the 14th, NKLA was consolidating in a tight range, looking great. So I was looking for some sort of morning spike or consolidation to break out. And that's exactly what we got. We consolidated, we broke out. I was buying in the 145s. We had a super tight risk reward, and that's what I love. Big runners, tight consolidation, nice breakouts with tight risk reward. I had 10,000 shares, and I was patient. Sold some in the 180s, and then was actually able to hold some for the next morning. Sold at pre-market. Did really well on that swing overnight. Made about, I think, $7,000 on that NKLA play right there. And then the next morning, I actually took it short. Let's go back to the daily chart real quick. So when we have a big runner like this, and it really speeds up compared to prior price action, and then we gap huge, this is a real outlier type of volatile move. And in these scenarios where we gap like this, there's pretty decent odds we're going to fade back down. I mean, this day we gapped up, and then we faded back down. It was the big volatility volume day. Same thing here. So while everyone's thinking, oh, this, gapping up, it's so strong, I want to buy, I don't play that game. I like to be a contrarian by nature. And this ended up, yes, spiking, and it was really nice. But when it cracked and had that first hard crack, and it seemed like it was the first momentum snap, I went short. In the 280s here, added some in the 270s when it really looked heavy, cracked VWAP. And I covered quickly because on gap up plays that are still green on the day, I like to play it safe rather than hold and it grinds all the way back up on me. And also there's other opportunities. So I covered, and then we ended up panicking more where I dip bought it for a quick scalp. I could dip by size. It's very volatile. It's very liquid. And overall on NKLA, I made over $10,000 on it. Maybe I even like $14,000, I think, in 2 days on that ticker. I mean, yeah, just on Friday alone with the overnight swing and the intraday trades. Yeah, almost $14,000 on that, which is awesome. Just really, really good. And then the 17th, which was the next day, I also played NKLA. I just scalped around on it. Nothing much to really talk about. And then just to show you what charts to really trade, I want to show you KSCP. This is one on the 17th I missed actually, which stinks. I wanted to go higher, but it's okay. But look at these multi-day running charts with big volume, big liquidity, go on nice runs. And if we look at KSCP here, we could see that it was a little different than NKLA. It cracked, stayed heavy, stayed weak. I like to see strength crack and then short it. To me, it's just safer because psychologically, if you think about it, it squeezes out a lot more of the early shorts and gives you better profit potential, because when people get squeezed out and panic, that's where opportunity arises and you can take advantage of that. So I looked at it as a different way on this. When it really panicked and got weak and all the longs were exhausted, and I thought about it from a short seller's perspective, and I said, okay, down in the 160s, I was thinking, okay, if I was shorting at 210, looking at the daily chart, looking at the price action here, how quickly it faded in the morning, I would probably be covering now or extremely soon. So when we cracked the 150s and then cracked, held again, I was dip buying, dip bought some decent size, scalped it, I think for a little over 1,000 or so. And that was just playing a small piece of a pattern, a micro pattern, if you will, on a big picture pattern. That's the best way I could put that. Yeah, that was the 17th there. The 18th, I wrote was pretty slow there. I don't have my trades. This whole week was pretty slow here. But then I just want to go over the end of the week, my TUP loss. This is actually a really good loss, even though I lost over $2,000 on it. If we come and look at the chart on this day here, I was thinking that, okay, maybe we have a breakout day, a gap up day, and a fade just like NKLA did. But it turns out I was wrong. Where are we? Right here. We got the gap up, and I was thinking in here, okay, it had a crack, I'm going to short it. I was shorting it at 245 price, and it was just staying strong, holding VWAP, which is a very important indicator when shorting these momentum trades. I noticed that as VWAP was holding and it was dipping below, it would just get bought back up on good volume. I was risking high of day, but I ended up moving my risk down to 260 because I believed if 260 broke, psychologically and just price action wise with all this volume, all the shorts are going to start getting scared, and there's a good chance we test high of day. And thank God I did that, because as we go on, we had a huge spike. And that's just a massive spike on massive volume. Shorts are screwed at this point. So as we continue with the day, we just kept spiking and kept spiking and kept spiking. And, I was already out about $1,000 or $1,500 from the morning loss. And then we start having volatility and panicking here. I dip bought it here way too early, got stopped out here, rebought it, and got stopped out exactly at $3, and then it had its nice little bounce that I was looking to scalp. Just a quick bounce like that, but I messed up. The best thing I did, instead of revenge trading and trying on the next dip or doing something dumb, I just said, you know what, I'm throwing in the towel, calling it a day, and waiting for better opportunity. Stop trying to scalp these micro patterns and look for big picture patterns. So, big picture patterns. The next day we gapped up again, and I'm thinking again, okay, this could probably gap and fade. And that's actually exactly what happened. We cracked hard. I started shorting it immediately in the 330s. We stayed heavy. I added a little here. We ended up going red. I covered a piece, and then I kept holding. But this 280 level that was very important from the prior day, actually I'll show you if we go back, you could see right here this wick, 3 million volume. And right here we broke out to 305. I was watching this intraday. We slammed all the way to 280, and normally that's a liquidity exit event where we're done. The chart's probably going to crack now and fizzle off, but we bought right back up from 280. So to me, 280, very important. And if we look, it was very important. I covered here as it was still holding. We ended up bouncing strongly, coming below, reclaiming, and going on a big squeeze again. So you definitely have to acknowledge key areas, key levels, and don't fight them. Use them, react to them. When they touch the levels, cover a little bit of your short. Don't hold and be stubborn, because listen to the chart. Don't listen to what you're thinking, because normally what you're thinking is wrong. Even what I'm thinking is normally wrong. You just happen to be right a few times with some good risk reward, manage your risk well, and end up being profitable, as long as you could stay level-headed, stay mindful. And speaking of staying level-headed and mindful, today was the 31st, is a perfect example of that, where we had a little gap up again. I was thinking short again. So I started shorting in the 320s here after the second rejection and lower high. We ended up coming back, and as a trader, you have to play both sides and think on your feet. So we started spiking again. I covered at 340. I went long at 345 and ended up, catching a good spike, good breakout. I sold some in the 380s, and then I sold the rest here in the 420s. When we got up to this level here in the 470s, I was thinking, okay, the spike is a little extended. It made a move similar to the last time it went parabolic, so it might be able to pull back. I shorted at 465, using $5 as a risk level. Yes, it's far away, but in a parabolic short situation, I like to use a risk level that's a little bit further to give me some room for error with smaller size. We ended up pulling. I covered in the 430s, dip bought a little bit into the volatility, and sold. Scalped out, was done with it. Always take advantage of volume and volatility if you can. NKLA was another trade I took today. I missed it on the morning buy, but I bought it at 270, scalped out, and then this was a very small detail that I paid attention to. So it was very strong. Everyone was thinking breakout. When everyone thinks breakout, I think be cautious. If it doesn't work as everyone expects and everyone's buying, where's everyone going to go? They're going to go for the exit and they're going to panic. We have resistance in the 280s, 295, psychological 3 level. So intraday as I'm buying, I already think, okay, I'm chasing this a bit in the 270s. But if it works, great. It started working right away. I actually sold a piece just to be safe and lock it in. Big volume was coming in, it looked great. But as the volume started to fade off, we started to go sideways and crack. What I start thinking is what looked like a for sure, easy, long breakout, run to 3, make a bunch of money. I'm thinking, okay, the 5 million shares that came in right here are going to start getting a little antsy as the chart goes on. They might want to sell. So I just took it off. I said, you know what? I'd rather see it hold and buy again at 280 than be guessing into consolidation. And we ended up, cracking where I probably would have stopped out there. Came back up. I tried it again right here, but we failed. And I called it a day. I made some money on this, but really it was more of a scratch type of trade. And the main pattern trade I did today, last trade here that I'll go over for the month, was MNK. You see the, very repeatable trend here. What we see on all my charts that I trade, big run, big volume. So we had a big run, big volume. We came down at a red day. Once we put in a red day, I look for a bounce day, or the listed first green day is what this pattern's called. So intraday, I look for consolidation and a break above the opening high. And that's exactly what we got. I was buying at 220 and I was risking about 5 cents, so I was looking to make 15, and I was selling right here into this spike. And that's it. I called it a day. It went higher, but I took my safe, repeatable gain with great risk reward. That's what trading is all about. So that was my month in a nutshell. Not really much to go over, even though it was, a great month, about $30,000. The only thing I have to say is going forward, I need to do 3 things. And it's 3 things I've been doing, but I need to do them better. I need to refine them, and I need to master them. I need to be more patient, waiting for A+ setups, which as a result will make me trade less, cut out the noise, cut out the nonsense, focus on the real money makers, and you'll be way more profitable. And the last thing is size up. When you see these opportunities come, really push size. So to help me, I ask myself this question before I place a trade. Can you make $5,000 on this pattern? If I say no, I ignore it. If I say yes, possibly, I go for it. So for anyone watching, definitely come up with your goals coming into August. 3 things that you want to improve at, even just 1. Come up with a method, an action plan, and put it to use and do it day by day, month by month, and things will work out for you. I could guarantee that if you don't quit, it'll definitely work out. So yeah, that's my month. All my trades will be uploaded to Profitly shortly, probably tomorrow or Wednesday. And yeah, I hope you got some good information out of this, and I'll be uploading a little bit more, maybe some weekly recaps, some A+ setup recaps, and I'll even try and get